Imagining buying a house you never saw with your own eyes or felt with your own hands. And imagining that you're buying that house as if it was just an item in a Shopify store. Today I'm going to be researching the stock of Opendoor, an exciting real estate technology company that I am long. Are you ready? Let's begin. Hi everyone, my name is Avishai, and today I'm going to be researching the stock of Opendoor right after earnings, and we're going to go into the Q2 2021 results. So, looking at the financial findings of the quarterly reports, I'm going to jump in here to the earnings, and let's start with the letter for the shareholders. So, right off the bat, we're going to read the note from Eric. Each quarter, we got the opportunity to reflect on our journey to redefine how people buy and sell a home and transform the world's largest asset class. So for those of you who don't know, the largest asset class in the world is real estate, more than stocks, more than crypto. There's much more real estate value than anything else in the whole wide world. So he's proud to share the results. In the second quarter, they acquired a record number of 8,494 homes. So for those of you who don't know what Opendoor does, they acquire homes, they fix them up, they sell them. And it's kind of flipping homes in scale, but I don't think they'd like that description of their business, just because they use a lot of tech and data to make the decisions. And the idea is that you can buy a home with a click of a button, and you can sell a home more or less with a click of a button. So the revenue, they generated $1.2 billion and delivered an adjusted EBITDA of $25 million, representing a growth of 136% in homes acquired and 59% in revenue, and nearly $28 million in adjusted EBITDA compared to the first quarter. This strong outperformance is further evidence of a seismic shift in consumer demand towards the modern real estate experience Opendoor is pioneering. So like I said, Opendoor is bringing the whole experience of selling and buying a house to an experience of buying something on an e-commerce store. We founded Opendoor with a mission to empower people with the freedom to move and make it possible to buy, sell, and move at a tap of a button. So just like I said, together these investments have enabled us to help customers buy or sell homes over 100,000 transactions and expand our footprint to 41 markets across the country, including 12 new markets in Q2 alone. Let's see. Most importantly, we have scaled rapidly while delighting our customers with an experience that continues to exceed 80 in net promoter score from our sellers. Okay, so let's look at the 2021 second quarter highlights. Revenue $1.2 billion, up 59% versus the first quarter. And a gross profit of $159 million, up 64% versus the first quarter of 21. Net income of $144 million in losses in compared to the $270 million in losses in the first quarter. Adjusted net income, $2.5 million versus 21 loss in the first. Contribution profit of $128 million, up 68% versus, and just most important, I think here is that really they purchased an obscene amount of homes, up 136%. So they managed to really scale their business. They're showing that the business model works in huge scale. They grew inventory balance to 7,971 homes, representing $2.7 billion in value, up 224% versus the first quarter of 2021. So they're giving here a story. Meet the Petitos. Jack Petito, a homeowner in Orange County, California, needed to move to accommodate his growing family. And the Petitos had their sights set on moving to Colorado and knew right away that they needed to avoid the traditional route of prepping and listing their home. Both working from home with a young child, the thought of cleaning, staging, and vacating for showings seemed impossible. Plus, the added uncertainty of buyers' offers failed through from financing, inspection, or other contingencies was unsettling. Okay, so I want to just kind of take everything that they said here and kind of describe it in my words. In short, they're bringing you a story of somebody who wanted to sell their home and thought about all the dreadful things that accompany the process of selling your home, getting it ready, dealing with people who want to buy, etc. For many people, it's not a fun experience to try to sell a home or buy a home. The whole back and forth about all kinds of inspections and financing and all these things can be a very, I would say excruciating experience for some people. So let's see what they said here. The back-end experience was easy and the app was seamless. Everything was very user-friendly and transparent. So we're in tune with every step of the process along the way. You rarely have those types of experiences with a brand that makes you kind of have that wow moment. Okay, so really cool. Let's see what else they say here in the company. Our business continued to gain momentum in the second quarter. Offers more than doubled versus Q1 21, and real seller conversation was again at record levels. So when this company started, a lot of people kind of were on the fence on, can a company like this really deliver in scale and really manage to do this business in a way that is going to keep growing, because there was a question, are people going to buy and sell their house online in a new way that is completely different from the traditional way? Q2 acquisition volume was in part driven by the 15% increase in our buy box coverage versus last quarter. This means that we are now able to underwrite an additional 15% of homes in our existing market. As our pricing platform continues to ingest new data to learn and improve our price accuracy, we're able to expand the breadth of price points and home types that we can address. This in turn drives the flywheel for greater awareness, customer adoption, marketing efficiency, and market share over time. Let's see, we have also gained scale across our existing markets, demonstrating that we have the platform and operational capabilities to dial up our market share as our buy box coverage expands. Okay. What else? A key driver of our market share growth has been the growing awareness of our product offering. So a lot of people don't even know Opendoor exists. You might know Opendoor exists because you might have heard of it, or you might have heard of the stock, but there are a lot of people who are not active investors in the stock market and are not tech savvy. And Opendoor many times is like, what is Opendoor? So there's a lot of people who don't know what this is and have no awareness that this exists. Pretty sure my father, who has been living in the States for the past 40 years, does not know anything about Opendoor. So just a quick example, and shout out to Dad. New market expansion. Our mission is to empower everyone with the freedom to move, means expanding our presence in all markets nationwide. So I'm going to skip this, and I'm going to give you another tidbit, which you're not going to find in here. So I actually am seeing deals on AngelList, and I can't give names and can't give valuations, but deals on AngelList of Opendoor copycatters who are working in countries that are not United States. So this model of Opendoor has been already copied to other geographies, just because there are startups that know that they can raise money and they can build a business based on Opendoor's business model. Just like when Uber started, and many countries started having their own version of Uber, and then Uber would have to buy them out. So I can see Opendoor also buying companies in Europe, in Central America, in all kinds of places. I can see Opendoor using a lot of the proceeds from just taking out debt to do acquisitions and expand their business in a very aggressive way. There can be hyper growth on hyper growth. This can be a compounding startup in a sense. Let's see what else we have here. Digital end-to-end experience. Our North Star is to build the best end-to-end digital experience for every home buyer and seller. Let's see. We know that 65% of sellers who are also buyers. So we are integrating our products into one bundled experience. We are adding Buy with Opendoor for each of our sellers who are also looking to buy, and bundling title escrow and home loans to make transaction completely seamless and low cost. So one of the things here that I really like about Opendoor is there's so much opportunity on the financial side to give value-added services to the customer. So that's why I'm really long Opendoor, because I think the opportunities around connecting you with a home designer, and doing even a small service of taking monthly money to make sure that your house has proper maintenance. Like they have a relationship with you. They sold you a house. They bought for you a house. There are so many things they can plug into your lifestyle. And in terms of financing for buying the house after selling one, there's huge opportunities to just make free money off commissions of getting people good deals, because they know end to end what people are going through, and they'll have better relationships with the institutions giving out the mortgages, loans, etc. Let's see what else we have here. So you can kind of see the homes acquired, how it exploded all the way from Q2 2020 all the way to Q2 2021. We're talking about a huge percentage of increase. And if they can do in Q3 even a 50% increase on what they did now, then this company is heading for that $100 billion market cap. I think that's where they're going. I want to read a bit of the unit economics, just because you would expect a company like this to improve their unit economics. And just going over kind of the data here, you can see that the company is going here into detail on the kind of unit economics they have, and you can read this for yourself. But all in all, they're increasing the basis points they're keeping for themselves versus former quarters, and their margin performance was driven by a combination of structural improvements and temporary benefits. So our ability to use data and technology to manage our inventory resale is a structural advantage that is beneficial to margins. We use data to manage our sell-through velocity and margin and portfolio approach to optimize price compared to individual sellers who don't have the same level of insight. Furthermore, we continue to drive efficiency on our cost structure, which has resulted in over 200 basis points, that's 2% if you don't know, of structural improvement over the past year. In addition to these durable improvements, we did see a higher than expected home price appreciation as a tailwind to margins. So Opendoor is saying that in addition to things that they actually try to do, there is a appreciation that was just, kind of a natural occurrence that happened from supply and demand and the inventory they bought. We anticipate both of these benefits to moderate during the course of the second half, so they're kind of tempering expectations that this tailwind will continue into the future. And cash and marketable securities, $1.8 billion for the end of the second quarter 2021. And in addition, they end the quarter with a total borrowing capacity of $4.3 billion across our non-recourse asset-backed facilities. So, not an ironclad balance sheet, but a decent one for a company working in these scales and these leverages, and at this very, very early stage, I think, in their game. They gave guidance. The overall housing market continues to be underpinned by strong demand and tight supply. While inventory levels did pick up sequentially in Q2, they remain at multi-decade lows in terms of available supply. Furthermore, real mortgage rates remain at all-time lows, and homeownership levels are still well off their previous decade highs, which should further support demand for housing. So they're talking about positive tailwinds going into the future. They're giving good guidance, and Wall Street loves a upbeat guidance. As we look ahead, we're optimistic about our outlook for the second half of the year and beyond. You know that the stock price will move up on those kind of remarks. Given strong market dynamics and our accelerating demand, we expect acquisition revenue growth to remain strong. In the back half for the third quarter, we expect our revenue to be between 1.8 and 1.9 billion, which represents a 56% sequential growth over 2Q 2021. Let's see, at the midpoint of the expected range, we expected adjusted EBITDA to be between 15 and 25 million, which represents approximately 1% margin at the midpoint of the expected range. This reflects our planned moderation in contribution margin as mentioned earlier. Let's see what else is here. Yeah, that is more or less it. So if you want to go over the financial tables, you can see here, this is how the company looks like in terms of numbers and in terms of the cost of revenue, the gross profit. You can see that they're investing a good amount in sales and marketing as well as technology and development. So there's a lot of also costs that are increasing with time. So the business looks like they're on the right way, and they really surprised in compared to the expectations that the street had. So you can go over these on their side. I want to just kind of put in my final remarks about Opendoor. So I'm going to just reach here all the way till the end just to see there's no surprise. Yep. Nothing out of the ordinary going over the numbers. Cool. So Opendoor. What do I think is going to happen? I think Opendoor is going to have a lot of competition going forward, and there's going to be some challenges that are going to put the company's business model in a test period. One of those challenges, I think, is that the housing market is going to cool down. Another one of those challenges is that competitors are starting to find ways to compete with Opendoor's offering. I'm pretty sure Zillow, another stock that I'm long, is going to see what Opendoor is doing and try to understand if Opendoor is going to start creeping up on their territory. And if they're going to reach that conclusion, Zillow will probably retaliate with their own set of offerings. So I am long Zillow, I'm long Opendoor, I'm really long the US housing market, and I'm long the next 10 years in terms of people who want to own their first house and do not want to go through the same process of their parents, their grandparents. There is a new way to own a house, there's a new way to sell a house, and that new way is here to stay, in my opinion. Now, remember, I am not a financial advisor. Neither do I know what the stock price is going to do. So I'm not a financial advisor. I don't know what the stock price is going to do. And you have to make your own decision. You have to do homework. If you want to own Opendoor, you should own it for the right reasons. And if you don't want to be involved in the stock, I can completely understand you. This is a whole new world, and this is a speculative stock. This is not a blue chip stock. Now, if you found this video useful, this is the time to hit that like button and show the channel some love. And if you are new to the channel, and if you've never been on this channel, you've never seen any episode, and you enjoyed this video, this is the time to subscribe and hit that bell so you can get notified when new videos come out. If you've watched this channel and you're not subscribed yet, then you better subscribe fast, because the next videos that I'm coming out with are amazing and you don't want to miss them out. I'm going to be bringing to the channel a lot of new researching stock episodes on very interesting companies just like Opendoor. So thanks for watching, and I will see you guys next time.